Dom Chu. Dom, good to see you this morning. Also from the Journal on the news side, this headline this morning, Dow headed for worst April since the Great Depression.
Oh, my God.
What is this all about?
So basically what we have is a situation where over the course of the last several weeks, there's been an evolving narrative, if you will, right? We talked about this notion that with new policies, especially on the tariff front, what you have is a new degree of uncertainty brought to global markets, global trade, that then manifests itself in the way that markets have reacted with some of that downside volatility. Now, I remember over the course of the last, few weeks having this conversation kind of around the lead up to that so-called Liberation Day and the tariff announcement about the stabilization factor of the U.S. market and the U.S. economy. Over the course of the last several decades, the American economy and the markets, the capital markets, have been seen as a stabilizing force within the global economy and the global market, one that you can turn to no matter what, in good times and in bad. That narrative has shifted a little bit more. It started off a little bit more along the lines of, can you still trust the U.S. dollar? Now, the U.S. dollar is the preeminent and the world's really only reserve currency out there. It's the one that you go to because pretty much every asset out there worth having is denominated in U.S. dollars. The U.S. Treasury market is the deepest, most liquid sovereign bond market in the world. It is the safest place to be. In the course of the last few weeks, there's been a little bit of chatter early on about the luster coming off some of those assets, the U.S. dollar and the U.S. Treasury side of things. Over the course of the last couple of weeks, there is now a full-blown debate in certain parts of Wall Street about whether or not there is a market shine coming off the value of the U.S. dollar and the U.S. Treasury market. In no way is anybody out there saying that the U.S. dollar is still not a reserve currency. There is in no way anybody saying that the U.S. Treasury market is not the place that you want to be. But when you have a possible paradigm shift, a change in thinking about the way that the dollar is valued and viewed in the global market, the way that our sovereign bonds, the U.S. Treasury market, is viewed in the market, that shift or potential shift is enough to have traders and investors, not just here in America, but around the world, questioning whether or not you have to change the way that you think about it. Now, to be fair, Treasury Secretary Scott Bessent, like every other Treasury Secretary before him, has proclaimed the notion of a strong U.S. dollar and, of course, the idea that the U.S. capital markets are the deepest, most liquid in the world. The question now becomes, guys, whether or not that incremental effect of not just the tariff and trade policy, but now the attacks on the central bank and its independence and its leader are making those assets, again, relatively less attractive. They are still the most attractive out there, but in a term of relative less luster, could that change the way that people think about the way that the U.S. markets operate? That's what you're kind of seeing play out right now.
All right, CNBC's Dom Chu, thank you so much. Greatly appreciate it. And I love how Dom pointed out that we're still, obviously, where people have gone, will continue to go, most likely. And all of this depends on what Donald Trump decides he wants to do. I think that's what's rattling the markets, is that it's one person who's deciding how far he takes